Today I'm going to walk through my trade in the triple Qs step by step. I'll show you my checklist I ran through before pressing send, how I selected my strike, and how I'm going to manage it going forward. If you sell options for income like me, this is the framework I use that keeps me on the right side of the probabilities. I'm not guessing and I'm not gambling. Here's my playbook. I try to sell volatility when it's rich and when price is at support. I look for short-term oversold signals and then I manage my trades with strict rules. I only sell premium when the IV rank or IV percentile are elevated. At a minimum, that's 20%. I'm going with IV percentile because IV rank has been thrown off from April's insane volatility. And IV percentile here, it hit 41%. I also look at the implied versus realized volatility. In this case, that difference is 7.1 points. That means I'm being paid to warehouse that downside risk at a time when people are overpaying for protection. That's what I want. I know I'm harvesting the volatility risk premium and not some random noise. Price sold off into my Fibonacci retracements, my 618 and my 786, just above the 50-day average. Price also lined up perfectly with my point of control on my volume profile. I anchored my volume profile starting on May 12th. That's when the April sell-off went back above the 200 period average. I also looked at my anchored VWAP, also starting from May 12th. That lands around 544.50. This is my deeper support level, and that's the level I want to be below when choosing my short strike. I don't sell into empty space. I want to see a confluence between moving averages, fib levels, and volume profiles. That makes up my structural support. I use a 2-period RSI to signal short-term oversold conditions. This is what I did here. I normally wait for an uptick in the RSI before opening in position, but the setup, it looked good. And the candlestick on the 20th showed a decent lower wick, showed strong volume. Buyers were showing up. The last thing that made me comfortable was looking at my 5-minute chart, and I watched price recapture the VWAP. A little after 9 a.m. my time, price closed back above and held. This showed me again that buyers were taking control of the session. So I sold here, but at half size. I'm planning to add more once I get a stronger confirmation signal, hopefully tomorrow. I sold the 535 strike, which was the 23 delta. Again, because I'm entering before my uptick, I kept my size smaller and I placed a short strike below my anchored VWAP level of 544. My risk management rules, I'm going to defend or I'm going to roll if my short leg delta pops up to around 35. I've also have a hard stop, 2 times my credit. I'll take profit at 50%. A daily close below the 50 period, I'm going to expect further downside. If I lose my anchored VWAP level and IV is expanding, I may try to box in my risk by converting to a put credit spread, or maybe I'll just take the stop. I'll also watch the term structure. If it begins to get stressed, I might tighten my defend and roll level to about a delta 30. From here, I'm watching for the first RSI uptick, and then I'll probably scale towards a full-size position. If you want my detailed checklist as a one-pager, please drop a comment and I'll pin it. And if this step-by-step breakdown was helpful to you, please hit subscribe. I'm going to continue posting and tracking all my real trades with my full set of rules so you can build your own playbook.